80-90% of our payment volume used to be in Bitcoin, and now it's shifted over to stablecoins a lot as well. So I think we're probably at like 30 to 40% Bitcoin now, and stablecoins, which used to be 5 or 10%, are now the majority at like 50 to 60%.
What is the future of crypto adoptions from the industry side? Let's examine this with Sean Mackay, CEO of CoinPayments, a very large crypto merchant company that's well positioned to answer this question. Sean, welcome to the show. Thank you for joining me today.
Thanks for having me, David.
Let's start by talking about what CoinPayments does, and we'll set the conversation up that way.
Yeah, CoinPayments, we're a crypto payment gateway and also a custodial wallet solution. So if you're a business and you want to add a crypto payment option for your clients, you can integrate CoinPayments into your business, and we support a few hundred coins. And I think it's always increasing. I think now we're at about close to 200 for payments and over 2,000 for custodial wallet.
I think people listening to this are wondering what your clients use these coins for. I mean, it's not just trading and speculation. You're not like a Robinhood, right? There's actual utility behind what they're using it for. Can you just comment on, without going into too much detail, but what types of clients you work with and the types of merchants that you work with?
Sure. Yeah. I mean, CoinPayments is not an exchange. We're like I said, a crypto payment gateway. So we process payments on behalf of merchants so that are transacting value with their clients. Traditionally you might use Visa or PayPal or Stripe or something like that, but maybe your clients have some crypto that they want to use instead of those other payment methods. So, by integrating CoinPayments, it allows them a crypto payment option when they go and check out and buy something on the site. So in the beginning, we had our focus on the e-commerce space and retail merchants selling things in their e-commerce stores to their clients. And gradually that's shifted over to a bit more of the platform type of operators like online casinos and exchanges and that kind of thing. So we offer basically two types of integrations, one for the e-commerce side where we're transacting, processing a specific amount for the payment, and then the other more for the platform side where the platform's users can make deposits into the platform and we facilitate all that.
You talked about e-commerce being a big industry that you work with. Is there a lot of demand for cryptocurrencies as a form of payment from the e-commerce side? When people think about e-commerce, they think about eBay, Amazon, and currently the biggest ones, I believe, don't have a very efficient way or any way for you to transact using cryptocurrencies.
Yeah, I mean, those are definitely the biggest players in the e-commerce space for sure. But that's mostly certain parts of the world. There's definitely other parts of the world where those players aren't yet established. And in a lot of the other parts of the world, crypto can be a great solution for them. But just generally speaking, yes, we got our start kind of servicing the e-commerce space. And within that space, the different types of markets, some of them are quicker to adopt crypto payments because you also need the other side. You need your customer to actually have the crypto to pay you with, right? So the types of customers that have crypto and want to use it to pay with kind of typically started out more on the tech side. So clients that were selling web domains or hosting or VPNs or proxies, all that kind of stuff were kind of like our first type of clients, the retailers, the merchants that sold those services. And then gradually it's expanded to kind of be more kind of mainstream type of retail sales as well. But that side of our business, while it got us our start and built a good brand, built a good client list, our main focus now is on these platforms that have, hundreds, thousands, millions of users using the platform, and we just have one integration into the platform to allow crypto payments all throughout the platform.
Would you say the highest adoption rate on your multiple platforms or your main platform has been outside of North America?
Yeah, we don't even service the US anymore. So our largest client base right now is out of Europe, which is where we're registered. And that's kind of where our focus is now. We are planning expansion into other regions, two main ones that we're working on right now with the sales team and compliance. But for now, we've got our heads down building. We've got a big release for an update to our platform coming out soon. And then just internally trying to align the team We've grown a lot since the last year, team size. So we're just trying to get everybody working efficiently on all of the priorities that we have. Right now it's tech, sales, and compliance. Those are our main priorities.
But generally speaking, Sean, why would a merchant want to transact, whether it be a web hosting company or a VPN company, want to transact using cryptocurrencies rather than just traditional fiat via the banking system?
Yeah, well, the traditional kind of payment system, it relies on both sides, what kind of banking or payment you're using on the customer side and what kind of banking and merchant service you're using on the merchant side. Um, so, sometimes if you're selling online, you can have clients all over the world, especially if it's a digital product and not something that physically needs to be shipped. And that really you can't take payments from like people halfway across the world. Sometimes the banks don't align and it just rejects the payments. This is especially true in the high risk space where it's hard for merchants to get service from the credit card companies. And even if they do, they're paying huge fees like upwards of 10% per transaction when the norm is probably around 2 to 3%. Um, so, in those types of situations, and also kind of the international sale of merchandise, or not merchandise, but like, just online sales, it makes sense for cryptocurrency. It's like a borderless solution, a payment solution where you're basically just sending an amount of coin to an email address. This is as simple as that.
But where does CoinPayments fit into this picture? Suppose I were a merchant and I'm a small business. Why can't I just set up a wallet, a company wallet, and have all my clients and suppliers transact using that wallet?
Yeah, you definitely could. It's a very manual way of doing it unless you're planning to build out the whole automated software infrastructure for that. But you have to be, tapped into the blockchains to be able to understand when the blocks are processing that incoming payment. So you can verify that that payment has come through, that is for the right amount. And then you have to be able to attribute that payment to a specific client. And then if that client has some issues with the payment, they're going to reach out to you and you're going to have to provide the customer service, go look it up on chain, figure out all the issues, whereas if you install the coin payment software to facilitate the crypto payments, we take care of all of that for you.
I do want to talk about your the launch of your new platform coming up, but I want to learn a little bit more about this. Can you comment on the transaction volume or the size of transactions that you've been seeing on coin payments, perhaps this year versus last year and the year before?
Yeah, I mean, in the last 6 months, the volume has been trending down. I think it's a general kind of outlook on the market. Everything is kind of tightening up a bit, I guess. And I think people just don't want to use crypto as much. They'd rather hold on to it than use it. We typically see in bull markets where crypto prices are high that people want to start using it a little more, get more value out of their coins. So rather than trading it, they might use it as a currency to buy things with. And now I think it's kind of the opposite. We've kind of gone slightly into a bear market crypto winter. Feels like maybe we're coming out of that a little bit now. It's definitely warming up. But yeah, generally speaking, our volumes for the past 6 months have been trending down. So, we've been putting the focus, as I said, on the platform, compliance sales, and then just building and aligning the team internally.
What's been driving this downtrend and then, like you said, this uptick? Has it been correlated with the price mostly, or were there other factors?
Yeah, it's a little bit of both. A lot of the upticks and downtrends of just our volumes in general, they've always kind of correlated with the prices of crypto. Generally, when crypto prices are higher, people want to spend their crypto, get more value out of it. And when prices are lower, people want to, hold on to it and wait for the price to come back. But now we're also in a different kind of market environment with like higher inflation, high interest rates. Just people are kind of risk averse right now. So just in general, I think the utility and adoption of crypto is not quite at the level where it can ignore this type of a market condition.
Are you able to comment on the dollar amount of volume that we see in coin payments?
Yeah, I mean, on average, we have the crypto payment side, and then we have the custodial wallet side as well. But as far as the crypto payments go, we do like a couple $1 billion worth of volume per year on average. It's been growing year over year. We've definitely seen the adoption. So yeah, there's like a more specific number for you. Um, and then yeah, also, we process we support a lot of different cryptocurrencies on the platform, and we've seen a major shift in the recent months and years away from Bitcoin, which used to be about 80-90% of our payment volume used to be in Bitcoin, and now it's shifted over to stablecoins a lot as well. So I think we're probably at like 30 to 40% Bitcoin now, and stablecoins, which used to be 5 or 10%, are now the majority at like 50 to 60%.
I was going to ask you that next. We hear about Bitcoin dominance in the news in regards to the Bitcoin market cap versus other altcoins, but it's interesting to see how in a real world application of coins being used for payments, Bitcoin dominance or Bitcoin, which was once dominant, is no longer dominant. You mentioned only 30-40% of your trading volume. I wonder why the preference has shifted to stable coins and away from the largest cryptocurrency, which was Bitcoin.
Yeah, I mean, I can speculate on that, but I don't have the truth necessarily. But stable coins have risen in popularity a lot recently. They've gotten a lot of attention in the media. And people, it's a transactional currency. It doesn't fluctuate in value. So the merchant doesn't have to worry about selling their Bitcoin when they get it, so that they don't have to worry that the next day it's going to drop a significant amount, and their sales are going to be just fluctuating all over the place. So yeah, stable coins offer a good solution for that, to stay within the crypto space and kind of transact with crypto, and the ease and functionality, the cross border, all the great characteristics of cryptocurrency, but without the volatility.
You're right; it's not volatile. But have the merchants you work with expressed concern or moved away from stablecoins following the collapse of Luna and then more recently USDC depegged last month?
Yeah, it did depeg. I don't think anybody was really worried about that one. They all knew that, it depegged on like Friday night, and the banks aren't open for them to like restock their accounts and shift money around until Monday. Whereas crypto is 24/7, and that kind of thing just doesn't happen. I mean, it gets resolved right away. But yeah, no, Friday and Monday was a holiday, I'd be waiting till Tuesday. And anyway, so there's definitely a play to be made there if you knew a little bit about that. But yeah, USDC is one of those well-regulated stable coins that are, above board, and it's kind of, I think, probably the gold standard, I would say, for stable coins and transparency and regulation and officialness. Um, yeah, so when we do process stablecoin transactions, we use the market rate rather than a fixed dollar value. So there are some times where you're checking out and you're trying to pay $100 order with a stablecoin, but you only have to pay 99.50 or $100 and 10 cents. It's not quite exactly always one to one. There's always a couple small points off.
Are you able to comment on the other types of stable coins that have been popular on your platform?
Yeah, I mean, Tether and BUSD are the other two that are the main ones. Tether is just a monster around the world. It's all obviously got the gray cloud hanging over it for all these years, due to the kind of just bad press it's gotten from kind of being not being as transparent about their holdings and that kind of thing. But despite all that, the people who use it have agreed that it's a trustworthy stablecoin, right? And they believe in it. So it doesn't even matter what their holdings are. The people transacting with it, they have a big enough network of people that are using it, enough users. So anyway, Tether is definitely a big one, although USDC is starting to overtake it as far as the payment volume goes, and BUSD is kind of hanging in there. So yeah, I mean, Tether also exists on a bunch of different networks. Well, so do they all, but I say Tether on the Tron network is probably the fastest growing stablecoin as far as payment volume goes that we see.
And when CBDCs do inevitably come, many people speculate it's a matter of when, not if. 114 countries around the world developing it. Many countries already have it, mostly in the Caribbean. How will that change coin payments? Will you be servicing, I guess, gateway payments with CBDCs as well?
Well, we have to monitor about how they're planning to release their CBDCs. Are they planning to use a public blockchain for them? I would assume not. It's probably be some kind of private blockchain within the country operated by the government, but I have no idea. So once, a little more detail comes out on a specific CBDC, then we can look to it and see what the requirements are for us to integrate it into our platform and facilitate the payments with it. And even with all this, don't forget that it still requires both sides of the transaction. So even if we do integrate the latest CBDC, if the people, the customers, the clients of the merchants don't hold it, then there's not going to be a transaction there, right? So it needs both sides of this. One, it needs all of the software providers, the merchants to adopt allowing payments in it, but it also needs a much bigger adoption within the client base, the consumer base, for them to want to actually use that to transact with.
This next question is more of a speculation. Nobody knows the answer to this, but I've heard the opinion that stablecoins overall is an asset class, if you want to call it an asset class, will one day surpass Bitcoin in market cap and size, precisely because of its utility on platforms like CoinPayments. People actually use it for real transactions. I'm not saying people don't use Bitcoin for real transactions. It's still 30-40% of your overall volume, but stablecoins is gaining popularity, and one day that popularity will surpass Bitcoins. Do you see that happening?
As far as market caps go, yeah, I think Tether's like number three now or something. Anyway, it's been in the top 10 forever, like most of the stablecoins have. Um, Certainly possible. Stablecoin utility is definitely more about payments and transacting value, whereas Bitcoin is moving more towards the store of value, kind of investment type mentality, kind of like a gold, for example. So yeah, I think people are less and less willing to transact in Bitcoin if they had a stablecoin option, and they'd rather leave, their speculative investment kind of holdings in the Bitcoin side, and then if they're still trying to transact in the crypto space, use the stablecoins for that. So certainly possible that the total market cap of stablecoin is going to surpass Bitcoin.
Just one quick question about stablecoins. When we move on, I'm curious, how does a stablecoin change its market value, overall market cap? I mean, the value per coin is pretty much fixed, and you'd have to change the supply. But do we want that?
Well, yeah, I mean, you just want to increase the supply, which means that it's getting more and more adopted. More people are holding it. It's got to come from somewhere. So if it doesn't come from other people spending it, it's going to come from the issuer of the stablecoin, adding more stablecoin into the supply in exchange for however they're backing the stablecoin, typically dollars in a bank account, for example. So
But that won't dilute the value if you add more supply.
well, if you're adding more supply of stablecoin token into the crypto market, you also need to add the backing for those coins as dollars in your bank account or whatever other method is backing the value of the stablecoin.
Right. Okay. You said your staff has been putting your heads down and working on a new launch and a new platform. I'm curious as to what the next steps for CoinPayments are.
Yeah, I mean, typically during the crypto winters, a lot of these crypto projects, they just bury their heads, ignore the headlines, which are usually doom and gloom, and just get to work on their projects. And that's the same with us. We for a long time now actually been working on a major update to the platform, just more secure, more scalable, faster, all of the great stuff, but just a better user experience overall is the first step. And then the second step is adding some features that are really important to clients that we've really started to get to know after talking with them at a lot of the conferences we've been going to recently. It's been about 5 years since we've done conferences, and we're finally starting to get back on the circuit, and it's just been great. I mean, the one we did earlier this year in London, it was very eye-opening to see how many crypto payment providers are out there. There are so many out there. It's almost demoralizing having to see all that. But anyway, so there was that part of it, just giving you a good perspective of what the market looks like these days compared to a few years ago. and then also getting to talk to our potential clients directly and find out what's important to them, what features they use the most, and how crypto fits into their business. And it's really being able to guide us on developing this big update we're planning to release in the coming months.
Will the payments gateway still be your primary business line, or are you planning to expand into other forms of business?
Yeah, I mean, as far as what the platform looks like, it's going to be targeted to the same types of people, payment gateway for the merchants, custodial wallet for the consumer or even the merchants. Um, right now, our focus is building out our B2B side. That channel has kind of been neglected over the years, and we've kind of put all our focus into like a self-serve type of platform, where people will come on and we provide all the resources to help get them integrated with CoinPayments and starting to transact with crypto in their business. But now we're taking a more handheld, personalized approach with the B2B channel, and that's really where our focus is right now to try to grow all that, which is why we're kind of back on the conference circuit.
I think Elon Musk said something like Doge was the best payment coin on earth. I'm paraphrasing, but something to that effect.
Sounds like him.
What's your thoughts?
Yeah,
Agree,
yeah.
disagree?
They changed the Twitter logo to the Doge logo for like
Yeah.
a day or two as well, right? He's a character. But it's impressive how
Uh,
much you can, one little tweet from him or whatever shifts the price so much. That's
I think the whole world just wants to know when he's going to make that the Twitter logo again, so we can all buy Doge today.
yeah, I
That's
mean, that he's not done talking about Doge, right? So once you find a good entry price for there, then yeah.
uh, uh, is Doge actually used on your platform for
Yeah,
anything?
yeah. It's definitely been a top 10 coin by volume for ever since we began. People actually use it
Okay.
for payments for sure.
Wow. But okay. But it's not.
Surprising. Yes.
But so people don't mind the volatility then.
Well, I mean, it's more volatile now than it used to be when it was like, fractions of a cent for each coin. Um, yeah, no, they just use people. I don't know, Doge holders for some reason they're like a different breed. They're just active. They want to transact in it, and it's they're a different type of holder than most.
What's a coin that has surprised you in its usage on your platform besides Doge?
Besides Doge, there's two coins, I guess, that I can mention. One is Ripple. I'm surprised that, the payment volumes for Ripple have come down quite a bit since, a few years ago. And that's surprising to me because their focus has always been about payments and about cross-border payments, all that kind of stuff. So that's a bit surprising. And then Dash is the other one. Um, they put a lot of focus into their kind of e-commerce side and promoting Dash as a coin to be used for e-commerce. They've gotten all kinds of solutions like Instant Dash Instant, something like that. Just quicker ways to settle your Dash payment. Um, and I'm surprised that their volumes are not increasing. I would have expected uh, a lot more payment volume coming out of Dash. But again, it's the chicken and the egg problem where not only does the merchant need to accept that coin as a payment option, but the customer also has to be holding that coin to want to make that payment. So it's tricky adoption of crypto, but we're getting there. It's clear.
Well, one thing that I am surprised at is Bitcoin itself. I mean, are you surprised at the fact that Bitcoin is no longer the dominant coin on your platform? Well, perhaps it is if you're just counting, individual coins, but you said 30 to 40% of your transaction volume, but it was more dominant before. If you look at Bitcoin's white paper, it was originally intended as a peer-to-peer payment, cashless payment system. And I'm not saying it's no longer a cashless payment system, but it's being superseded by other things like stablecoins. Is this trend surprising for you?
Yes and no. So I think once the Bitcoin adoption is out there and there's no more adoption really to be had, then the Bitcoin price is kind of going to stabilize a bit more, right? And if we're talking like years from now, and let's say Bitcoin's like over $1 million, when you're transacting for $100, and the Bitcoin price fluctuates by, like one couple percent, it's not going to affect things too much down there. But basically, what I'm trying to say is, once Bitcoin is fully adopted and there's not too much more adoption for it to be had, I think the prices are going to stabilize a little more. But right now, we're still in a very speculative early days of Bitcoin where prices are all over the place, very volatile, still kind of unproven whether, this, whatever, there's a lot of changes happening, very volatile, still in the early days. So that's why, people are less prone to wanting to spend Bitcoin right now when tomorrow it could be, up 20%. And merchants are less wanting to accept Bitcoin today when tomorrow it could be down 20%. So that's why stablecoins have kind of just shot up in utility and adoption rate for payments because of this lack of volatility, yet still existing in the crypto sphere, which has all the benefits of crypto, borderless payments, the push nature of it rather than pulling, no chargebacks, just the simplicity of it all.
You said Bitcoin is not fully adopted. One day it will be fully adopted. What do you mean by that?
Well, I mean, I guess Bitcoin's pretty relatively new in the grand scheme of things, as far as the theory of it actually being used in real life, solutions that have been developed for it, and all of that. So the adoption hasn't reached there yet. If we talk about adoption as every person holding some balance of Bitcoin, and we're not there yet. And when we do get there, that's, there's a limited supply of Bitcoin, and everybody to hold a little bit of it is gonna, cause the price to go up, obviously, but also it'll settle somewhere around in the future, right? It shouldn't, it cannot, I mean, maybe it can, but I don't think it's going to be this volatile forever.
It's kind of a chicken and an egg problem because, I mean, what you're saying makes a lot of sense and something I've been thinking about for a while. But for people to adopt Bitcoin, for everybody to hold a little bit of Bitcoin, because, not everybody is a trader or an investor. Not everybody I know in my personal life cares about trading and investing, but everybody needs some form of money to survive, to make transactions with. But you're saying that Bitcoin needs to have lower volatility for people to want to have that kind of usage for Bitcoin. But we're not going to get that volatility until people adopt it, right? So I'm just curious as to why everyone would want to hold Bitcoin. What other usages would there be?
I mean, the go-to usage for Bitcoin, in my opinion, is a store of value, right? It's an investment. It's, deflationary, kind of like gold, basically. Um, so yeah, I mean, it is a chicken and egg problem for sure. And it gets even more complicated because when you do start introducing more people into Bitcoin and more people start using it, there's only so much throughput that can currently happen on the chain. And additional solutions need to be developed to allow more transactions to happen, for lower transaction fees. Because right now, I mean, the way things are, especially during periods of high usage on the network, those network fees spike quite high. And if you're using it for daily transactions, not only does it take a long time to confirm when, the alternative of Visa, you just tap it and the payment's done. But also you're paying a huge network fee. And this is a network fee, which, Visa typically puts on the merchant to pay, and the customer just pays, the exact price they're shown. Now with Bitcoin, the customer has to pay the network fee. And during these periods of high usage on the Bitcoin network, the network fees spike. And it's been up to $40, $60, I believe, at some point. And to like have to pay that on top of whatever you're buying, just doesn't make sense. So
Yeah, actually, I think you told me last time we spoke that Bitcoin has problems when it comes to transaction. We're using it as a transaction. Low efficiency would be one of them. High cost, low speed relative to some other coins. How do the merchants on your platform get around these problems? Do they add layer twos, or what do they do?
that's one option. But generally speaking, most of our clients are online merchants, so they're e-commerce. So they can wait that time for the payment to confirm before they move on to the next step of like shipping out the product that was ordered, right? Whereas if you're in person in a brick and mortar store trying to make a purchase, that's when all of that all that stuff comes into play, that the wait times, that kind of stuff.
Right. All right. Well, Sean, I appreciate your insights. Very in-depth insider's look at how crypto payments are done and cryptocurrencies are used besides speculation. So thank you for your time today.
Yeah, thanks, David, for having me.
And thank you for watching. I'm David Lin. Stay tuned for more and don't forget to subscribe.